Dear finance professionals and students, welcome to podcast of Fca Deepak Rao, a practicing chartered accountant. Daily news and updates for 3rd September 2025. Following the recent meeting between Modi and Xi, Indian and Chinese companies are actively pursuing joint ventures in sectors like electronics and automobiles. Higher stake sale in its Indian subsidiary is gaining momentum, while Dixon Technologies anticipates approvals for joint ventures. The auto sector expects eased import restrictions, fostering a positive sentiment among Chinese companies towards India. Airtel Africa is gearing up to list its mobile money business Airtel Money in the first half of 2026, potentially valuing it at over $4 billion. The company has appointed Citigroup as an advisor for the IPO, aiming to capitalize on growing investor interest in African fintech. The CBDT has extended income tax exemptions for sovereign wealth and pension funds investing in India's infrastructure until March 31, 2030. This move, formalized after an earlier announcement, aims to attract long-term capital by exempting these funds from taxes on dividends, interest and capital gains. Indian automakers and retailers may face losses on over 600,000 unsold vehicles. This is due to unclear GST compensation cess rules. The industry wants the government to abolish the cess. They seek a mechanism for credit losses after the GST revamp. The GST Council will discuss levy changes soon. Some companies are limiting dispatches of larger vehicles. Capital Markets Regulator Securities and Exchange Board of India has cleared the initial public offering plans of 13 companies, including consumer electronics maker Imagine Marketing Limited, the parent of wearables brand Boat, home services provider Urban Company, and renewable power producer Juniper Green Energy Limited. At least 53 other IPO applications remain under review, according to SEBI filings. For companies like Boat, the confidential filing regime offers a key advantage. Unlike the traditional process, where IPOs must launch within 12 months of SEBI's approval, the new route provides 18 months and allows adjustments of up to 50% in issue size until the updated prospectus stage. The 56th GST Council meeting, chaired by the Finance Minister Nirmala Sitharaman, begins on September 3rd and will end on September 4th. Expectation is running high about the possible rationalization of rates. The Council is expected to do away with the 12% and 28% GST slabs and keep a two-rate structure of 18% and 5%. A 40% GST slab for sin products such as tobacco and other luxury products is expected as well.
This podcast is sponsored by Sound of CA. We share because we care. Vande Mataram, Jai Hind.